This is a story about pressure. This week, the Fed held its July meeting just a week after President Trump visited Chair Jay Powell at his office to tell him what he thinks the central bank should do.
Too late. I call him Too Late Powell because he's always too late. Am I allowed to appoint myself at the Fed? I do a much better job than these people. Well, I'd love him to lower interest rates, but other than that, what can I tell you?
But the president's visit did not persuade Fed Chair Powell to lower rates, at least not yet.
Today, the Federal Open Market Committee decided to leave our policy interest rate unchanged. We have made no decisions about September. We don't do that in advance.
Special contributor Larry Summers joins us with what he expects for the U.S. economy with President Trump and the Fed chair on opposite sides.
There certainly are some risks of a downturn. There are also some inflationary risks coming from the tariffs, coming from general economic strength. And so he decided not to commit, but to preserve flexibility. I think that was the right course of action for him to take. If the economy turns down, there's the scope to cut rates very rapidly. But if inflation's a problem, there's a risk of a loss of credibility. If you're a responsible Fed official, you've got to remember that you got nervous about the economy last September. You cut rates by 50 basis points, and the upshot was a 75 basis point increase in the subsequent 2 months in the 10-year rate, which fed through into a major increase in mortgage rates. So I think what the Fed did was the prudent thing under the circumstances. It wouldn't surprise me greatly if it turned out that the economy had slowed and we wish we had cut rates now, but if that error's been made, it's an easily correctable error, whereas if you made the opposite error and sacrificed credibility by moving excessively, that would be a much more damaging and difficult to reverse error. I think the other thing that needs to be said here is you can argue both sides, as I just did, about whether we should have a quarter-point rate cut in July, whether we should have 2 rate cuts this year or 3 rate cuts this year. I don't know of any economist who sees merit in the president's idea that rates should be cut to the 1% range. And I would want to hear what his colleagues in the administration give as a rationale for that kind of theory of interest rate setting, which, given the current rather happy state of markets and rather strong economy, seems to me to be a very, very dangerous one that would court a major loss of credibility.
Perhaps Chair Powell got it right, but he had at least 2 of his colleagues who disagreed with him. He had 2 dissenters. For the first time since 1993, it's been a long time since we had 2 dissenters. And they weren't asking for a 300 basis point rate cut, maybe the 25 basis point cut. But what do you think that they're seeing we're not?
I don't think it's a complete coincidence that who they were appointed by and in what context. That may not be a complete coincidence in terms of understanding what's going on. Look, I think their argument is that under the surface, there's substantial economic weakness, and it's important to get ahead of the weakness. And my reaction is, if that comes to be a prevailing judgment, the market will do that itself. And it's the 2-year rate and the 5-year rate and the 10-year rate that's more important for the behavior of demand. And that to the extent the market doesn't do it itself, the Fed will be able to do it 6 weeks from now and be able to be more energetic if that proved necessary. So I don't think there's any kind of urgent need for the cut. And I think we are a bit playing with fire. We have a central bank that missed the last inflation badly. We have increased politicization of everything financial. We have tariffs that are pushing up prices. We have epic budget deficits. We've had a period when the dollar has declined substantially. So a moment like that seems to me to be a moment to err on the side of preserving credibility rather than take chances that could put credibility at risk. And that's why I disagree with the judgments of Governors Waller and Bowman.
One of the reasons for the Fed not to act right now is uncertainty because of tariffs. And Chair Powell addressed that it's taking some time to really be reflected in the real economy. What everyone thinks of those tariffs, and you've talked about it in this program before, we have to admit President Trump has gotten a lot of tariff deals done in a fairly short time.
Yeah, but the difficulty, David, from my perspective, is that they're mostly self-inflicted wounds. They're mostly putting taxes on that raise the prices that American consumers pay, not just on imported goods, but on the goods that compete with imported goods. Affordability is the most important economic issue as judged by American families, and tariffs are a direct attack on the affordability of things that people buy. Tariffs are also a blow to American manufacturing because we're tariffing the inputs on which our manufacturers depend. When we raise the price of steel or aluminum, we make it more costly to make cars. We make constructing homes more costly at a time when we have a housing shortage. So it seems to me that this idea that tariffs are going to be somehow the salvation of the manufacturing sector is not an idea that is seriously supported by analytical work or by real evidence. And most of the economists with expertise in this area who study it conclude that probably it's as likely that this program will hurt manufacturing as that it will help manufacturing, and that the one thing that is certain is that it will raise prices and reduce affordability. Whether that increase in prices will be a spiral of continuing inflation or one-off, that's a hard thing to judge, and it may well be only a one-off. But why would we want to have the major objective of American negotiation with our closest allies be to impose something on them that they hate in order to raise the prices of the goods that American families buy? So I just don't get it.
President Trump has made no secret of the fact that we should expect a different Fed chair come next May at the expiration of Chair Powell's term. That raises the question whether Chair Powell will stay on, because he has another 2 years to remain on the board if he chooses. Secretary Bessent has made no secret of the fact that he thinks it would be appropriate, or even he would encourage him to leave the board. Secretary Bessent was asked at the news conference about it. He just refused to address it. What do you think about that issue?
I don't understand why anybody would who is involved in a complex set of negotiations and bargains would give up any flexibility by making any prior commitments to people who are bashing them every day. So I don't know what Chair Powell will do. I suspect Chair Powell doesn't know what he will do. It'll depend upon aspects of his life, I imagine, and it will depend on who the next Fed chair is and what the sense is of how the Fed is going to operate going forward. But I don't see any reason at all for why he should prejudge that question any more than you should prejudge the question of how long you're going to do Wall Street Week, or I should prejudge the question of how long I'm going to be a professor at Harvard.
We had in the One Big Beautiful Bill the $1,000 setting aside investment for each new child born. You and I have talked about that before, about whether that's enough money and what the administrative costs are. But we now have Secretary Bessent suggesting, I think he called it perhaps a backdoor way of shoring up retirement savings and earnings for people in the out years. What do you think about that at a time when Social Security is under increasing pressure?
I was surprised that Secretary Bessent made the comment. I was not surprised that, having made the comment, he has been backing off it since then by trying to suggest that it all goes together. But I think he got the thinking right the first time. There's a philosophy of individualism that believes in just making people take responsibility for their own security and rejects the idea of public cooperation for old age insurance. And that's something that Republicans have always flirted with. And I think you're seeing another example of that. I am very nervous about this program. My prediction is that when somebody does an accounting 5 years from now, the level of payments made to various financial firms and information technology companies to keep track of these accounts is going to be very large relative to the amount of spending or the amount of support that American families received. And that's always been the Achilles heel of Social Security privatization.